Welcome to the Deep Dive. We're here to cut through all the noise, get you straight to the important stuff, the nuggets of knowledge you need. Today, we're tackling something pretty interesting in the crypto market puzzle. It's all about where the smart money, where it might be heading next. You know how fast things change in digital assets? So today, we're zeroing in on one specific prediction. It's definitely grabbing headlines. We'll unpack this idea of capital rotation and why one, well, prominent veteran trader thinks a particular altcoin is like getting ready to pop off.
That's right. And our mission today really is to distill the core ideas from this recent article on dailyhoodle.com. It highlights the outlook of a crypto trader, goes by the name Pentoshi, pseudonymous, of course. But, I mean, he has a huge following, over 880,000 on X. So, yeah, when he talks, people definitely listen. We're going to dig into his specific claims about Solana, SOL, and his strategy, which is quite disciplined, and importantly, what this all might mean for you for understanding these, well, complex market flows.
Okay, let's get into it then. Unpack this. Pentoshi.
Yeah.
He starts his analysis by pointing to what he calls a solid rotation, something happening in the crypto market right now. Now, for someone trying to, make sense of all these shifts, what is capital rotation exactly? And maybe more importantly, why is it such a critical signal? Why should we pay attention?
Yeah, that's a great question. What's really fascinating about capital rotation, think of it like a barometer for market sentiment, where the focus is shifting. It's basically smart money moving from one asset class or one crypto into another, often signaling where the perceived value is or where the next growth might be. Pentoshi specifically sees this pattern. We've had, he says, some pretty solid rotation from BTC to ETH and now into SOL. So it's like a sequence, investors moving out of Bitcoin, maybe seeking higher returns, then into Ethereum. And now, he suggests, potentially into Solana. Looking for that next big opportunity. It's a really key indicator. Shows where conviction and, well, capital is moving.
Okay, that makes a lot of sense, especially, like you said, in a market as fast as crypto. But here's where it gets really interesting, right? Pentoshi's making a big call. He's saying Solana, SOL, is ready for another leg up. And this is after what he calls a multi-month correction.
Yep.
So what's he seeing? What are the signs on the chart, the sort of subtle cues he's picking up on? What specific technical things make him say this, maybe compared to other bullish calls out there?
Right. He does point to several key technicals, and they're quite specific, which is interesting. First, looking at Solana against the US dollar, the USDA pair, he says it's starting to squeeze. How? By making rapid higher lows. So imagine like a spring coiling tighter. Each dip finds buyers stepping in a bit higher than before. It squeezes out sellers, reduces supply at lower prices. It's a pretty classic sign of growing buying pressure.
Yeah.
And he also notes SOL is applying pressure to sellers. How? By repeatedly knocking on the $210 level.
Okay, repeatedly hitting that ceiling, basically.
Exactly. That sustained testing of a key resistance point. It often happens right before a breakout. Think of it like persistently hitting a wall in the same spot. Keep doing it with enough force. Eventually, it's probably going to give way.
So it's not just about the dollar price then. I think you mentioned he also looks at it against Ethereum. Solith. That gives another layer of insight, doesn't it? Maybe an even more telling signal.
Precisely. Yes, and it is a very telling indicator. He points out the Solith pair is now up close to 10%. This relative strength against ETH, which remember is another major altcoin that already saw big inflows from Bitcoin, that's significant. It tells you Solana isn't just holding its ground, it's potentially outperforming a major competitor, within this whole rotation cycle. He actually notes this was another solid rotation and still quite early with their DApp. Yeah, DATS, digital asset treasuries. He says they're similar to F, but not the same scale, of course. So this hints at maybe burgeoning institutional interest. These big capital pools, the DATs, are starting to allocate to Solana, kind of like they did with Ethereum earlier, but maybe SOL's just at an earlier stage of that big money adoption.
Okay, DATs, digital asset treasuries. That brings us neatly to Pentoshi's own strategy.
Yeah.
Which is, quite revealing. He says, pretty explicitly, he's not bothering to try and play the smaller altcoins within the Ethereum and Solana ecosystems. Why avoid those? I mean, isn't that where the explosive gains sometimes are? And what does he mean by front-running some of those flows from these DATs and also beta plays? What are those?
Right, good questions. And it gets to the heart of how an experienced trader thinks about risk versus reward. Pentoshi is very clear. For him, he says, the risk to reward is way in favor of simply following the flows from the digital asset treasuries, DATs that are allocating to ETH and SOL. So beta plays. He's talking about those smaller, often much more volatile altcoins. They tend to move kind of like the bigger assets, like ETH or SOL, but often with way bigger swings, up or down. High risk, high potential rewards sometimes, but he's deliberately choosing not to play that game.
Okay, so he's avoiding the high volatility stuff. But about the DATs,
Yeah.
these big treasuries, don't they move really slowly sometimes? Isn't there a risk that by the time they allocate, a lot of the easy growth is already gone? Is he really front-running or just catching a later wave?
That's a great point, a fair challenge. And yeah, institutional money, these DATs, they often do move more deliberately, more cautiously. But the key is their sheer scale. When they do commit, their buying can be massive and sustained over time. So Pentoshi's idea of front running, it's maybe not about catching the absolute bottom tick. It's more about positioning himself ahead of the sustained buying pressure from these big players, these multi-month, maybe multi-year campaigns. He's anticipating the big wave building, not just the first ripple. He believes by figuring out where that big patient money is headed, he gets a better risk profile long term, riding the major trend instead of, speculating on the quick, smaller, maybe transient beta plays. And these treasuries that need liquidity, established infrastructure, that often just limits them to the bigger, more robust assets anyway, like ETH and SOL.
Right. And he connects this to his past experience, doesn't he, with Ethereum? He said he didn't play the beta there. BC, you had billions going into F. And that for beta players overall, it didn't work out great. That sounds like a pretty hard-learned lesson. Can you elaborate on that? Why does that inform what he's doing now?
Absolutely. And that's such a crucial bit of context. It really is a historical lesson. It tells you his strategy isn't just theory, it's forged in past market cycles. He saw firsthand that chasing those smaller beta plays, even inside a booming ecosystem like Ethereum was back then, it often proved less effective, or at least carried way more risk than just holding ETH itself. Sure, some individual small coins might have had insane short-term pumps, but overall, for the average person trying to play the beta during Ethereum's big run, his assessment is it didn't work out great.
Why not? Too hard to pick the winners. Too much volatility.
Could be a mix of things. Lower liquidity making it hard to get in or out. Extreme volatility shaking people out. Or just the sheer difficulty, the effort of picking the right tiny coin out of hundreds or thousands. So his conclusion seems to be rather own what the DATs intend to buy. Meaning, he prefers holding the core assets that the big institutional money is clearly targeting. He thinks that offers a more stable, less stressful, and maybe ultimately more rewarding path in the long run. And just for context, when this report came out, ETH was around $4,458. SOL was about $205. Gives you a sense of the scale difference and the kind of money involved.
Okay, so bringing it all together, this whole deep dive into Pentoshi's thinking on Solana, on capital rotation.
Yeah.
What does it really mean for you listening, whether you're deep in crypto already or just, curious about how these markets actually tick? It feels like more than just one prediction about SOL, right?
Oh, definitely more. I mean, the real takeaway here, the kind of distilled insight, isn't just what Pentoshi predicts about Solana. It's how he filters the information, how he makes decisions. He seems to prioritize the, let's say, quiet hum of institutional capital flows over the much louder, often speculative chatter around those beta plays. And that offers a really compelling perspective on how a veteran trader reads the market. Looking beyond just the surface hype, it really highlights how important identifying these capital rotation patterns can be. They can act as early warnings or early signals of where market sentiment is genuinely shifting. And his experience suggests that maybe aligning with these bigger players, even if it feels less exciting than chasing microtrends, might actually be a more robust strategy, maybe even less stressful in the long run. It makes you wonder, right? Are we sometimes distracted by all the flashy small moves and maybe miss the sheer power of where the big money is consistently going?
That is a powerful shift in perspective.
Yeah.
It's a great example of how maybe watching just a few key signals, understanding those larger capital movements, it could give you a kind of shortcut to being well-informed about potential shifts without getting totally overwhelmed by every single headline or tiny price wiggle. It's about seeing the underlying currents, not just the surface waves.
Exactly. It's recognizing that while, individual projects have their stories, their merits, the most significant sustained price movements are often driven by these huge entities, the ones allocating vast sums of capital. They often have different goals, different risk tolerances, different regulations than individual traders. Understanding their flows gives you a whole different lens to look through when evaluating opportunities.
And that wraps up our deep dive for today. We've explored how this veteran trader, Pentoshi, sees potential in Solana. Driven, he thinks, by a clear capital rotation from Bitcoin to Ethereum and now potentially into SOL. And crucially, we unpacked his strategy, that disciplined focus on where the big money, the DATs, the digital asset treasuries, where they are moving, rather than chasing those smaller, perhaps more speculative beta plays.
Yeah. And it offers a really valuable framework, I think, for understanding market dynamics. This core idea that significant patient capital flows can really dictate an asset's success over time. And that sometimes, maybe a simply strategy, one focused on these deep currents, could actually be more effective than trying to constantly jump on every small, fleeting opportunity. That's a powerful takeaway, I think, for anyone trying to navigate these markets.
So thinking about this perspective, identifying capital rotation, trying to anticipate or front-run these larger institutional flows. What does that suggest about how you might look at opportunities? In any dynamic market, really, does focusing on where the major capital is shifting maybe offer a more stable path than diving into every shiny new altcoin that pops up? It's definitely a compelling reminder. Sometimes the most impactful moves, the most sustainable ones, they don't come from the loudest noise. They come from the established players, making large, often predictable moves. Something to think about. Keep exploring, keep questioning, and keep diving deep.